It is possible to become free from debt, financial worry, your boss, and your zip code. You can start living a life you love, but first, you need to find your freedom. Using financial independence and lifestyle design principles, you can create the life of your dreams now. There are many paths to freedom, and that is what this podcast is all about. My name is Becky from 20free.co, and I am the host of the Find Your Freedom podcast. In today's episode, I'm chatting with Sunitha Rao of Griffix Property Group. I interviewed Sunitha in episode 2, and I encourage you to go listen to that episode as well for a fantastic discussion around money and mindset. Today's interview was recorded on April 15th, 2020. 10 years ago, Suni retired from nearly a decade of playing tennis professionally at the age of 23 with a 6th grade education, quite literally no money, and very little knowledge of how the world worked outside of her sport. Fast forward to today, she's earned a bachelor's degree in business and finance from Babson College and an MBA, has no student debt, a successful career in corporate finance, and a budding real estate business with 7 doors in her portfolio. Her goal is to achieve financial freedom while also having a positive impact on others' lives through investing in real estate by purchasing distressed properties and repairing them to provide safer, cleaner, and higher quality living environments for her tenants and guests. I wanted to do this interview with Sunny because I know a lot of people use real estate as an investment strategy to reach financial independence, and others might be thinking about getting into it. As someone who knows very little about real estate, I was really curious how real estate investors are doing in light of the coronavirus crisis. If you are more of a stock investor than a real estate investor, I encourage you to listen to episode 13 with Donna Soa Allard, a certified financial planner. Now, let's get to the interview with Sunitha. Thank you for coming on the podcast, Suni.
Thanks for having me.
Give us a little bit of background into your real estate investment business. How many buildings and units do you own, and in what region?
So I live in Indianapolis, and all of my properties are in the Indianapolis area. I am a buy and hold investor, so I buy distressed properties, fix them up, and then get tenants in. Most of my doors are long-term, have long-term tenants in them, so that is a little bit less sensitive, although still very sensitive to all the economic issues that we're facing that are kind of coming hand in hand with COVID, with people being laid off, being furloughed, like businesses stopping, Out of my 7 doors, 5 are long-term rentals. I then also have 1 short-term rental, and that is more sensitive to the market conditions than the long-term rentals. And that's been kind of interesting to face and figure out. And then my last door is a house hack, so I live in it, and I have 1 roommate who contributes to the mortgage, essentially.
So you mentioned that the short-term rentals are more sensitive in a financial climate like this. In particular, are you using that short-term rental as an Airbnb, or tell me about that?
Yeah, so I have been marketing both on the Airbnb and VRBO platform, and they both have their unique advantages. When things were still good in terms of both travel as well as people felt like the economy was doing well, my Airbnb took off pretty quickly. I was told that, you're probably going to break even for a while. You don't have reviews, you don't have a track record, so people will be less likely to book with you, and therefore your earnings might be lower. So just try to keep it in line with expenses. My first couple months really, really overshot that. I think my second full month on market, I would have expected maybe 300 because that's what I need to cover my expenses. I made $2,000 that month. Business was taking off. And that was even during the slow months, the slow travel months, the holidays. It's at the end of last year, and I was very optimistic, thinking about how I could update this business model and keep it improving, keep profits trending upwards until COVID hit. We're kind of faced with a double whammy right now, both with the travel restrictions as well as people having lower discretionary income to spend on things like a getaway for a weekend or a couple of days or a trip with friends. In order to kind of combat that, I have had to drop my rate significantly and also shift my business model from a strictly short-term rental platform to also taking they're not long-term rentals, they're kind of longer short-term rentals. So I had 1 guest come in, I gave her a really good deal to come in for 3 weeks. And then right after she left, I did the same thing to have someone come in for 2 months. And this is definitely taken a huge hit to my bottom line, but I'm able to cover my expenses and also make a little bit of a profit, which is very fortunate in these times when a lot of people don't have money to travel, and a lot of Airbnb owners are just sucking wind right now, trying to keep their rentals afloat. I think things are going to change down the road. Right now is the worst of it because we're dealing with like a disaster as opposed to a downturn. Once we're able to, I think, travel and life returns to normal, I think that will be the time to kind of see what happens and reassess if we hit a downturn after that. But for right now, I think my goal is just to keep it afloat, keep it slightly profitable if at all possible, but that's certainly not my expectation. And just stay in business until we get to a different climate.
And that short term rental then is relatively new. If you started renting out in, maybe November and December of last year.
Yeah, so I'm still learning the ropes, and it's definitely a little bit mentally difficult just because going into March, April, May, June, July, those are supposed to be the busy months. So you kind of suck it up through like the slow months, try to make it work. For me, try to learn the business. I was told that it would take me a year to learn how to price it seasonally, et cetera. And now we're just layering a whole bunch of new complications and new variables that make it hard to understand exactly what the best strategy and pricing mechanism should be. But live and learn.
Well, I'm glad to hear that you're still able to fill that by pivoting your strategy. That's something that I've seen from entrepreneurs in every different field, is that we're having to pivot either the way that we're marketing what we're doing or the offerings that we have to fill the needs in the market, which are significantly different now. Some people are not going to spend money in the ways that they have been, in the past. It's completely flipped on its head. So I'm glad that you're able to fill that. And is this the property that you had to take off of Airbnb for a little while to do some capital expenditure fixes to as well? So it just got back on the market, didn't it?
Yeah, exactly. So it was off all of February to fix and install new heating appliances, et cetera, for the guests. So as I said, it's a new rental, so I didn't know all of the nuances of the property, which I had to learn as we went along. So yeah, took it off, put it right back on early March, which is right when all of like the COVID madness started to come in. So the timing has been quite interesting.
And the rest of your properties are long-term rentals, right? So can you tell me how that's different when you have a renter with a lease in one of your rental properties?
Yeah, that definitely varies from the short term rental model. There's less room to pivot and there's less room to make changes to your business model because tenants have rights, you know? And so if you have a year long lease, you just kind of have to work with them, understanding that people are going to hit hard times and try to do your best. I just hope that they don't try to take advantage of the situation. Some do, but others are very, I'm thankful in that I have very good tenants for my long term leases. And they've been communicative and they've been able to get it together to get last month's rents in. And I think the real test, though, is going to be moving forward, seeing how long some of them are out of work and that sort of thing. So there's definitely going to be a need to pivot and potentially pivot in terms of strategy and potentially take some losses in order to keep the tenants in, because if you don't keep them in, then that also incurs more costs. You're also in a tougher environment where it's difficult to rent, you know. It's just about being flexible and trying to have enough cash reserves on hand so that you can weather what comes at you.
Right. It's not ideal to have a vacancy at this time, and trying to fill that would be challenging.
Very challenging.
Your tenants are paying on time as of right now. It's been about the first month's rent with this new economic situation that we're in. What are the rules and regulations in your areas around things like that? Do you have to house people for the long term, even if they can't pay their rent, and kind of work with payment agreements and payment plans in that sense?
It would be ideal to work with the same tenant if they are respectful and also like work with you. Evictions have been halted as of almost a month now. So if they don't want to pay and don't want to work with you at this moment, I can't quite do anything about it. Thankfully, I do have a property manager who manages the majority of my properties. And so she has also lawyers and people with more information on her side. So I allow her to make those decisions because I trust her and she knows what she's doing. But yeah, basically right now you kind of have to work with a tenant and hopefully everything kind of washes out in the end and everyone can take care of their responsibilities.
That could be a scary situation for some rental property owners if they don't have high quality tenants and they're not sure that they're going to be able to either receive rent from those tenants or potentially evict their tenants to get a new tenant that could pay rent. That would be kind of similar monetarily to having a vacancy for a period of time. Is that something that real estate investors like you plan for in terms of having cash reserves?
Yeah, well, I don't think like when I run my models, I don't necessarily plan for evictions, but an eviction in our area typically costs about $300 to $500 between like filing the legal fees, getting the lawyer to show up in court, etc. So there should be ample reserves for different capex and vacancies. And honestly, it's the chances of you having an eviction in all 12 in the same month is very slim. If you have adequate reserves, you should be able to cover a couple of evictions here and there. If you think about it like in the grand scheme of things, the majority of people you know aren't going to have to go through the eviction process. And if you have a diversified portfolio, your portfolio is like a microcosm of the environment as a whole, right? So if you are placing good tenants and screening them well, typically you wouldn't see like the majority of your portfolio needing to be going through an eviction process.
And is the diversity in your portfolio that you're talking about the quote unquote grade of the properties in terms of being in an A, B, or C area? Can you explain that a little bit?
Yeah, so diversity can come from like geography, from asset class, and also from like the number of units you have, you know. So the more you have, the more that risk is spread out and the better equipped you are to handle that. Because if you have, let's say, 10 units bringing in $500 a month, and if you have three evictions that cost 500 each, the other seven will cover those evictions, you know, so you don't necessarily have to come out of pocket.
Right.
Those numbers can also be tough depending on how much margin you have with like the mortgages, et cetera. So I think what people kind of forget and what's been a little bit challenging to see has been kind of this tenant. I mean, I don't see it in my tenants, but I see it with other landlords that are like almost this backlash, like tenant, like landlords should forgive rent during this time. And I mean, I'm very socially aware and would love nothing more than to help, but at the same time, I have mortgages to pay on those very properties. So if I forgive that month or 2 months, it's going to be hard for me to make my mortgage. And then guess what? Like the tenant isn't going to have a place to stay because sooner or later the bank's going to foreclose. So it's like it's been definitely challenging times, both in terms of trying to make sure like the business stays afloat and the wheels keep running, but also what is the right thing to do in your own conscience.
Absolutely. And I'm sure that's really challenging. I think to think of it from a homeowner perspective, though, if you were to not pay your mortgage, you could work with your lender. Certainly, that's something that lenders are doing. So, in that sense, your renters can work with you as their landlord. But at some point, the bank's going to say, you know, tough stuff. You didn't pay your mortgage. We have to repossess the home. So I can see how you're kind of stuck in a really challenging spot where you don't want to be putting people in a poor financial position, but it is their financial obligation to pay for the housing that you're paying for through your mortgage.
Correct. Correct.
Yeah. When you talk about asset class, is that the grading thing that we're talking about?
Yes.
Sorry,
Yes. Yeah, they are the same. And
okay.
if do you want to dive into that super quickly, or like
Just
what are
like a
your
quick
thoughts?
overview, just because probably have made this clear, but I'm not a real estate investor. I don't know very much about real estate, and I have heard some about it, but just for, the audience listening who are thinking, I want this to be educational for people who are thinking, okay, well, how does real estate work when we are in an economic downturn, when we're in this really different situation where people can't travel and you're not seeing short-term rentals. So just for people who might be looking into it and aren't already familiar with it, if you want to explain the asset classes to me real quick.
Sure, yeah. So asset classes typically have like a letter delineation: A, B, C, D, F. Obviously, want to stay away. from half. It's not unlike school, right? So, and I think the one important thing to remember is that everybody has a slightly different bias in terms of how they grade the asset class. What some might consider an A, others may not. But there is no disputing that an A is the best, you know? So A asset classes tend to be like higher in value. They tend to appreciate more. They tend to have like more white collar workers as tenants, that might be like where the doctors live, or if they don't buy their own home, or just other high earners. They tend to be in good school districts and have lower crime in those areas. It's just generally like a more stable, more safe place to live. When you move down to like the B class is still very good. It's also still hard to find deals in the B class because that's where a lot of people want to be. It's still like there's still good areas where you attract a stable tenant, people who want to stay there long term, who are less transient, who are theoretically more responsible financially, have better financial footing. And then when you go down to C class, that's the more of like a blue collar workforce, right? So like more manufacturing, maybe some restaurant folks, like a more smattering of people who can afford to pay rent, obviously, but may not be in like those white collar careers. And so I think with what I've anecdotally heard so far, this is by far not like a broad brushstroke or really anything to derive true insight from, but like those who have more C-class properties seem to have had a little bit more trouble getting rent from the tenants. But theoretically, on paper, the C-class properties that make better projected cash flows because the mortgages are cheaper. Whereas when you go into A class, those properties are much more expensive. So that's why it's harder to get deals where you can cash flow positively after the rent as you go up the asset class. But there's definitely like a whole host of other things to look into as well, because it's the C class properties may not appreciate over time, and you never want to buy anything strictly on appreciation. But the A class properties do tend to appreciate more, tend to hold their value better. And especially in good times, or if you buy well, the higher class properties can provide like a higher ceiling in terms of two kinds of returns. One is the cash flow, but then also it's a little bit easier to increase your net worth through the appreciation of the property. An example is the first property I bought almost exactly 2 years ago. It's in like a B plus neighborhood. And I went to go refinance it last fall. So it would have been a year and a half about after I purchased it. And because of the neighborhood, because we were in a good time economically, and because I purchased correctly, it appreciated for 45% higher than what I had purchased it for. So like those are like the different mechanisms you can use to like build your net worth and build your value, and also build your business, because I was able to take out a line of credit against that increased equity in my property, which is what I then use to reinvest and buy more. Right. It's kind of long-winded, but I hope that made sense.
Yeah, that totally makes sense. And I could see how there might be larger economic effects on people who work in gig economy jobs and restaurant jobs in this kind of climate when you can't do those jobs from home. Some and many white collar jobs can be done with a laptop as long as you have an internet connection working from home. But those service based jobs, even retail and customer facing jobs, can't really be done. And if your business is deemed an unessential business, it could be required that you close. And those people might be experiencing a decrease in income, right? So just to get an idea of the finances that you're dealing with, do you mind sharing what your mortgages are that you're responsible for on a monthly basis, and then what your rents are?
Yeah, so I think when we look at mortgages, it's also important to look at taxes and insurance in addition to the mortgage, because if at any point you don't pay any of those, you can't hold on to the house. Like a lot of lending agreements with banks require that you keep it insured. My mortgages with the taxes, with the insurance for all my properties come out to about $3,800 a month, which is a lot of money. If I'm in a place where like none of my mortgages pay, then I have the reserves and I still have my full-time job. So I could keep it afloat for a little while, although it would certainly be very challenging. But Like my payments, it's a little bit variable because my Airbnb does contribute to this, but I would assume close to 5K a month, including the house hack that I get from my roommate. So that leaves me a buffer of a little over a grand in case things happen, in case there are evictions, in case someone doesn't have to pay, someone isn't able to pay, that sort of thing.
That's very interesting for me to think about as someone who is not involved in the real estate market at all, but having that $1,000 or so of additional income gives you that buffer where you could handle maybe one or two short-term vacancies if you were to somehow have the trifecta of issues where you have vacancies and people who can't pay and capital expenditures that you have to make all at once. Then that's where it starts to be like that $1,000 buffer might not be enough. And that's when you'd be dipping into your cash reserves, right? How emotionally does this feel right now? Because I am reflecting on kind of that information. And for me, I feel nervous like for you. Tell me how you're feeling about it. And since we don't know, the problem, I guess, is really the uncertainty, right? We don't know how prolonged this period of travel ban is going to go on, but also how prolonged the economic downturn is going to be. And if that long-term affects your tenants who are long-term renters from you, that could affect their ability to pay. So just give me some insight into how that's going for you.
I think at this point I've started to acclimate a little bit, but that doesn't necessarily mean that it's easy. It can be quite stressful. I think the first couple of weeks, especially when everything was on lockdown and there was like no way of knowing what was going to happen, and that was before like that first month's rent was collected, the uncertainty level was huge. And so I think with us hopefully in the next couple of weeks starting to resume life, it feels like there might be an end of the tunnel to this specific period of disaster. Whether the downturn follows it or not, that's a completely different issue. And that's something that I don't think any of us can predict or truly think about. And the only way we can prepare is to take care of what's under our control. And I think that's been the biggest thing for me, is to focus on what I can control. If I focus on the fact that people can't work, people can't do X, people can't do Z, it'll make me crazy. It kind of did for a minute. There's thinking about that doesn't really help unless you're using that to figure out how much money you need to be prepared should the worst case happen. But once you figure that out, once you're working to that or you're at that, then it's time to kind of let that go and see if there are other ways to generate in revenue increasing activities or revenue stabilizing activities, and how you can stabilize that business no matter what happens in the future. Trying not to get mired in like that spiral is key right now, because it's not an easy time. No one knows what's going to happen, and you can't control that, but you can control how you react to it.
I love that advice. And to be completely fair to real estate investing, people who are invested in the stock market right now aren't having an easy time either. There are risks associated with any type of investment that you choose to do. There's risk associated with keeping your money in cash, and that's that inflation is a sure bet and you're going to lose value in your money if you stuff it under your mattress. So a lot of people are kind of dealing with this stress, and some of us feel, oh, the grass is greener on the other side. Maybe if instead of stock investing I had real estate, then that would be more stable in an economic downturn. Or maybe real estate investors are thinking, maybe if I was in stocks, I would see the rebound faster. I wouldn't have to worry about these kinds of issues that I'm seeing.
Every business is having a hard time. It doesn't matter how you generate your income, you're taking a hit somehow, and the grass isn't greener on the other side. And we all make different decisions based upon our needs. You can't go back and change the past. This isn't Harry Potter. You don't have a time turner, you just have to focus on, okay, this is where I am right now, and what do I do to make the best of the situation? Because things are hard right now. They're not always going to be that way. However, there will be opportunities to make money, to come out of this better than you came in. How are you going to do that? That is where the focus should be.
Yes, and I love focusing on the things that we can control and the things that we can change, because wishing and hoping and kind of getting to that despair feeling where it's like, this is terrible, but I can't do anything about it. It's not productive on one hand. It doesn't help us prepare better for the future. It doesn't help us become more resilient. It almost puts us in this mentality where we're stuck in the worst of it.
It's a static mindset versus growth mindsets are always key to achieving your goals, but this time it's especially important to not be in a static mindset. You need to be flexible and need to figure out the best way to come out of this.
Yeah, definitely. And I love that. Problem solving and creativity are going to be key here for everyone. I mean, whether it comes to how you're making additional income on the side to supplement in case your full-time job goes away, or how you're pivoting your business model if you're an entrepreneur that offers services or products, or a real estate investor, even people who are looking for opportunities in the stock market right now, trying to figure out how it's possible to take what is a loss and turn it into a win. There's a great thing about kind of this conversation about mindset in that you don't have to get stuck on the things that are bad about the situation. You can move forward.
You have to get past that. And it's not always going to be, it's not going to be easy. I'm feel a little preachy right now, but because I know that I am still pretty anxious, but it is those thoughts that help me get past that. So at times, and then I'll come back and I'll sit there for a while and be like, oh my God. But it's just like that continual process to keep moving.
Yeah, and I have to acknowledge the privilege that I have to say that I'm able to step away from how challenging this is economically for me and for people that I know. I'm still in a very fortunate position to have saved a very large emergency fund before I left my job a couple of months ago. The assets that I had invested were not for short-term use, they were for long-term use. So I'm not concerned that I will be locking in my losses and having to take that money out for any reason. So I'm in a very fortunate position, even though I can acknowledge it's also a very stressful financial position to have started my business and come directly into an economic downturn, right? That's not what I had hoped for. But even though all of our positions are different, right? We're all in different situations. I think one of the things that we have control over, we can't control how long this is going to last. We can't control the spread of the coronavirus besides by staying at home, but we can control our mindset about it. And we can find those opportunities instead of just looking for the obstacles.
I agree wholeheartedly.
The other thing I just want to talk about was risk management. How did you prepare and manage your risk prior to this to be better set up to weather this crisis?
I think it just comes down to cash reserves, honestly, with my business model. And I do wish that I had more at this point. I don't think there's ever enough when things get tough, because of the level of uncertainty. But yeah, just making solid decisions overall, not taking on too much risk in terms of debt or in terms of what you think your profit margins are with what you would anticipate making versus how much it costs to keep your business going. I think those are really important. And then for me also, this might not be a long lasting option given how lending and banks work during downturns, but also having access to lines of credit just in case, especially if they're interest only payments for a while. If everything absolutely hits the fan, that can also be used as a cash reserve in a short time, but that's also a form of leverage. So that needs to be done very carefully at low interest rates and all of that sort of thing. So not something I would recommend necessarily for someone brand new. Someone brand new without a ton of properties should probably have adequate cash because they don't have the diversification, et cetera. But yeah, the lines of credit, the modeling before I got into the asset, and then having cash reserves, those are all how I try to mitigate the risk of what would happen when our current situation came aboard.
Even anticipating that this was a possibility. There is always a recession in our future, right? We didn't know the nature that the recession would take, the shape that it would take, but we knew that it was going to happen and that we had to be prepared, as individuals having emergency funds, as investors having cash reserves is super important. So I'm really glad to hear that. It also made me think about some of the advice that we hear about real estate investing is leverage, 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 to the point where someone like me, not very well versed in real estate investing, feels that some people might be over leveraged, where they don't have super high margins anymore. If one property or two properties out of a portfolio are vacant, they're kind of teetering on the edge, and they're really having to make sure that they can make those payments, or they might lose one of the houses. Those things where you're making sure that you're doing your calculations, like you said, before you get into a property. You're making sure that you're not taking undue risk when it comes to lending and when it comes to taking out leverage, because it would be devastating for someone who has a really great rental property business to have to declare bankruptcy or something like that because of a situation like this, which could potentially be a short-term, very severe, acute situation that we're dealing with, is not likely to be as long-lasting as the last recession that we were in. That's just something that made me think about, is kind of thinking about how much risk you want to take on ahead and evaluating that for yourself.
Definitely. You always need to be prepared for the worst case that comes down the pipeline.
And if you're prepared for the worst case, then things will go even better in the best case.
Yeah, exactly.
Thanks for being here with me, Sunny. I appreciate it.
Thanks for having me.
You can learn more about Sunitha's story at griffixpropertygroup.com and on Instagram at griffixpropertygroup. That's GRIFFIX, Property Group. To check out the show notes for this episode, which includes links to resources mentioned in today's interview and where you can go to learn more about Sunitha, go to 20free.co/episode 19. That's the word 20, FREE.co/episode 19. Suni and I talk even more about mindsets in episode 2 of Find Your Freedom, which you can find at 20free.co/episode 2. So check that out. I want this to be more than just a podcast for listening to, so I'm making it a do-cast, where you're getting information from the podcast that you can take action on to create real outcomes in your life. I call these power moves. If you implement even one of these tactics into your life, you're taking a powerful step towards finding your freedom. What are some power moves we learned from this conversation? Here are 5. Power move number 1, pivot your business model. Pivoting is taking what you are doing right now and switching it up to better fit the circumstances. Whether you are an employee, investor, or business owner, the challenging times we are all facing right now will require a pivot for most people. Employees might consider getting a side hustle or consulting on the side for more income diversification. Investors might need to think about changing their allocations or approaches. Sunitha mentions that as a real estate investor with short-term rental properties during this travel ban and economic downturn, she's had to pivot her business model to longer short-term rentals and lower her rates. This fills a demand in the market and helps her maintain profit on her short-term rentals. Other business owners might consider pivoting their offers to fill a need that they see has arisen due to the pandemic, or maybe they need to diversify their income sources to earn money in a new way. Power move number 2, take a long-term outlook. In the grand scheme of things, this is likely a short-term situation. The best thing to do in a short-term acute situation is to take a long-term approach. As an individual, continue to pursue your long-term goals and live in alignment with your overall core values. As a landlord, you want to keep your renters in the long term, so work with them to figure out payment agreements that work for everyone. You might have to take some losses to keep your tenants in, but vacancies in an environment where it's harder to rent, like a recession, are not ideal. Power move number 3. Realize the grass isn't greener. Whether you invest in real estate or stocks or something else, realize that the grass isn't greener on the other side. Every business is having a hard time right now. It doesn't matter how you generate income, times are tough and there are risks associated with every investment. Things are changing rapidly from the normal we are used to, and uncertainty is still high. Investors in every sector are being affected by the recession. Thinking that you would have been better off picking a different investment type is not helpful or necessarily even true right now. Figure out what you can do to weather the downturn in your chosen investments and use this time to think about ways you can be better diversified in the future. Power move number 4. Focus on what you can control. Thinking about the worst case doesn't help unless you're thinking about how much money you need if the worst case happens. Once you do that, let go and see if there are other ways to generate and do revenue increasing or stabilizing activities. Try not to get mired in the downward mental and emotional spiral. While you can't control what happens, you can control how you react to it. A growth mindset is really key here. You can control how you approach this challenge, and you can use creativity and problem solving to figure out how you might need to pivot your business, earn more money, and stay secure right now. Power move number 5, mitigate your risk. Now is a good time to examine whether your risk management strategy was enough for the worst case scenario. Mitigating risk in real estate often comes from cash reserves. This is similar to having an emergency fund for your personal risk management. As Sunitha says, there are never enough cash reserves when things get tough. Could you beef up your reserves a little more so that the next downturn is easier and less stressful to get through? In real estate, other risk management includes modeling ahead of time to make sure that your profit margins aren't too tight, not taking on too much debt, and having access to lines of credit. For most people, these are similar to the risk management strategies of making sure that you spend less than you earn, avoid debt, and have access to credit if needed. That is the 5th and final power move from my conversation with Sunitha Rao about real estate investing during a recession. Do you need help figuring out what's next on your path to finding your freedom? Let's work together. As a money coach and lifestyle design expert, I help people reach their biggest money goals, like paying off debt, building up savings, and using their money to create their ideal life. As your money coach, I help you gain clarity about what freedom looks like for you, develop a strategy to get there, and overcome your money roadblocks on the path to financial and lifestyle freedom. People work with me because they want to finally feel good about their finances and have a stress-free plan to create a life they love. And they don't want to spend years using trial and error and disjointed advice from the internet to figure out how to make it happen. I provide the proven tools to improve your finances and accountability to make sure that you take the action needed to change your life. If you want to take the concepts you are learning on this podcast to the next level, visit 20free.co/moneycoaching to schedule your free 10-minute call with me. I can't wait to help you transform your life and find your freedom. Need someone to talk with about recent changes in your finances due to COVID-19? Let's connect on a free 10-minute coaching call and discuss how I can help. Schedule your call today at the word 20free.co/moneycoaching. If you enjoyed today's episode, make sure you're subscribed to the Find Your Freedom podcast on whatever app you're using to listen to this episode. Do me a favor and also leave a rating and review on Apple Podcasts. Go to 20free.co/iTunes to be redirected to the page on Apple Podcasts where you can leave your rating and review. I really appreciate it. If you think this episode would help someone you know, please share it with a friend. Thank you so much for tuning in to this episode of the Find Your Freedom podcast. My name is Becky. You can connect with me on Instagram and Twitter at 20freeco and sign up for free resources and email updates at www.20free.co. That's the word 20, FREE.co. I'll talk to you next week on another episode of the Find Your Freedom podcast.